So, Morgan Stanley just put out this really interesting report on the Indian economy, and they used a funny phrase to describe it: a continued Goldilocks environment, like the fairy tale. But what on earth does a fairy tale have to do with a massive multi-trillion-dollar economy? Well, let's break it down.
We all know the story, right? For the porridge to be perfect, it can't be too hot.
And of course, it can't be too cold. Turns out that's the perfect way to think about the ideal state for an economy. A Goldilocks economy is one that's just humming along. It's growing for sure, but not so fast that it overheats and sends inflation through the roof. And at the same time, it's not slowing down or, heading for a recession. It's that economic sweet spot. And according to Morgan Stanley, that's exactly where India is right now. Okay, so what does this Goldilocks moment actually look like in hard numbers? The report lays out a pretty specific vision for this balance between growth and inflation. Here's the big one: a really solid 6.5% GDP growth projected for the fiscal year 2027-28. That's the just right speed we're talking about. It's strong, it's sustainable, but it's not dangerously fast. And here's the other side of that coin. This is why the growth isn't too hot. Inflation is predicted to land right on the Reserve Bank of India's target of 4%. That kind of stability is absolutely crucial, because it gives policymakers room to support growth without worrying about prices getting out of control. So, if the economy's in such a great spot, what's actually powering it? The report is super clear about this. It's not so much about what's happening globally, it's about what's happening right here at home. This chart really tells the whole story. See that big bar labeled PFCE? That's just a fancy term for all the spending by regular people, like you and me. You can just see from the size of it, along with government spending and investing, that the vast, vast majority of India's growth is coming from within its own borders. The engine is domestic, plain and simple. Which of course leads to the next big question. If domestic demand is the engine, then what's the fuel? What's giving Indian consumers and businesses the confidence to go out there and spend and invest?
Well, it's not just one thing, it's a whole bunch of things coming together. You've got easier monetary policy, which means cheaper loans, government tax reforms, which leave more money in our pockets. As inflation comes down, our wages are actually worth more. The job market is looking stronger. And on top of all that, you've got specific boosts like pay hikes for government employees and really solid demand coming from rural India. It's a powerful combination.
And hey, this isn't just a theory. We can actually see it happening in the data. Take a look at this chart of vehicle registrations. That clear upward trend in cars and two-wheelers, that's a classic sign of growing consumer confidence, especially in the cities. It tells you people are feeling secure enough to start making those big-ticket purchases again. Now, a recovery like this doesn't just happen in a vacuum. It's being actively supported by both the central bank and the government working together. Let's see how those two pieces fit. It's basically a classic 1-2 punch. On one side, you've got the RBI cutting interest rates and making sure money is flowing through the system. On the other side, you've got the government spending big on things like infrastructure while also cutting taxes to help people out. They're both pushing in the same direction. And Morgan Stanley gets really specific here. They're actually forecasting another quarter-point rate cut from the RBI in late 2025. They see rates eventually settling at what they call a terminal rate of 5.25%, which is basically the point where they think the central bank will pause. That signals that the policy environment is probably going to stay supportive for a while. Okay, but no forecast is complete without talking about the risks, right? And the report is pretty clear that the main challenges for India right now are coming from outside its borders. The domestic story is strong, but the global picture, well, it's a bit messier. So these are the big things to keep an eye on. A global slowdown would obviously hurt demand for Indian exports. And more specifically, there are some risks tied to U.S. policy. Things like higher tariffs or potential changes to regulations that could affect India's huge and incredibly important IT sector. However, and this is a really crucial point, the forecast has a key assumption baked right into it. Morgan Stanley's base case is that India and the U.S. manage to get a trade deal done by early 2026. If that happens, it would take a lot of that tariff risk off the table. So the outlook for the next couple of years looks pretty solid. But what about the long game? How does India keep this Goldilocks story going for years and years to come? The answer, as it often is, comes down to reforms. This chart gives us a fantastic roadmap of what could be next. As you move from the bottom left to the top right, you go from the really tough legislative reforms like land and labor towards the things Morgan Stanley thinks are more likely to keep going, like the big push on infrastructure and digital. Tackling some of those harder reforms could be what unlocks that next level of growth. All right, let's put it all together now and look at the final numbers that really define this whole Goldilocks forecast. And here it is, all in one table. Just look at that balance. Strong, steady GDP growth, inflation hitting that 4% sweet spot, a key measure of external stability, the current account deficit, is totally under control at around 1% of GDP, and the policy rate is expected to be stable. This is basically the just right scenario in a single snapshot. So the picture Morgan Stanley is painting here is of an economy with really strong foundations at home and a remarkable amount of stability, even in a pretty uncertain world. It seems to have found that rare balance. So the question that leaves us with is, what does a country do with a Goldilocks economy? What does this kind of stable platform enable for the next chapter in India's global story?